What's going on, family? It's your boy Romz, and today I've got another trade breakdown and backtest video for you. So I'm actually breaking down 3 trades, 1 win, 1 loss, and 1 monster trade that I missed out on. But the most important part of this video will be the lesson that I learned and the lesson that I'm going to teach you that will protect you and stop you from losing loads of money and losing trade after trade. So make sure you stick around for that nugget. All right, so let's head straight into the chart. Okay, so what we have here is Euro USD, and I'm actually going to be showing you the trade from the 9th and the 20th and 21st of June. Okay, so I'm going to bring you up to speed on the daily chart so you can see where we're at, right? So what we've got here is we've got price action where you've had a low, sweep liquidity and create a new high, and it's left us with an order block. Price has come back down, it's tapped into this order block. Again, within this order block, price has done an internal sweep, and then we've created a new high. When the new high had been created, it had come back down and it had swept internal liquidity and filled this daily imbalance. And now we are currently bullish on, say, the 1 hour and the 4 hour. And we're going to see what happens when we go down to the 4 hour. So in the 4 hour, you can see that we've tapped into this fair value gap in this zone and a key area where price potentially could give us a reversal, right? So if you go down to the 1 hour, you can see price has tapped into that fair value gap. You see it's a clear one on the 1 hour, this push up, okay? But what's interesting to see is the price action and how it's coming, like it's almost step laddering down, slowly pulling back, right? And if we go down to the 15-minute, is when things start to become even more clear and make more sense. And I'm going to break down the way I see the market, and hopefully it will help you guys, especially you guys that are just starting out. I'm not the best trader in the world. I'm just sharing my journey with you guys on YouTube, and you can see how I see the market, and hopefully you can learn something from it. Look at this as my online journal, right? So if we go down to the 5-minute now, I'm going to show you the first trade that I took. And you can see that, if we're on the 50-minute, sorry, we're currently bullish, right? So price is bullish. We've had sweeps of liquidity down here, sweep, new high, right? We've had equal lows created, and then the lows hold, create new highs. Tapped into a fair value gap on the 4 hour, 1 hour, and prices start to retrace. So what I'm going to show you is what I was seeing at the beginning of London session on the 20th of June, right? And what I was looking at. So the way I look at the market, I look at strong highs, strong lows, the way or where market has swept or hasn't swept, the lows and the highs which have held and which haven't held. I'm going to break that down for you a bit more. So what I saw the price had come down and it had swept this low here. All right, so price has swept this low here, and then it had come back down, and then not quite made a new high at this point, but price had come back down again during Asian session, which is what these pink boxes are, and then it had swept this low. So it swept this low, and then it's about to potentially create a new high, right? So if it created a new high and give me a market structure shift on, say, the 5-minute, which it had done, which is great, but I don't trade during Asia. So for example, this entry right here, I've missed out on because it was during Asia, so I wouldn't be interested. This here would actually be the full-on breaker structure that would really certify the fact that this low would be being held, right? But I don't necessarily need that. I've seen multiple lows, so I've seen this low but get swept, and then price give us a market structure shift on the 5-minute. If I go back to the 5-minute, so here you can see that this level here was taken, and also this level here was taken, and then price had come back down, taken an internal low. The main low had held here, yeah, it was tapped in, and it's like we're about to create a new high on the 5-minute in regards to structure. It had already given us a 5-minute market structure shift at this zone, this level here. So now it was me looking at London to see what London had to offer me. Because I had seen these strong lows being formed, market order flow being respected, and let's see what happens. So if I tap in, right, so this point here now, this is where it's crucial. The structure for me had been confirmed. So the way I trade, I use liquidity and I use structure. So I use liquidity inducement concepts, whatever you want to call it, plus structure, right? So I was looking at this, I saw this low had been swept, and then it had created a market structure shift. It had come back down, and then this low again was respected by this low. And then we created and we broke structure. So now it's like, okay, so where are we going? Where's the actual draw on of liquidity, right? And what I was looking at was this, a few things actually. First of all, these lows here, looking like trend line highs. Sorry, did not lows, highs, sorry. Looking like a trend line. So I saw that, I saw these as potential liquidity to target, right? And I was looking at potentially, you know, price going all the way to at least this level here, because this, you see this wick. This wick here had swept this liquidity on the 1 minute here, this high on the 1 minute, and then created a new low. And I believe that price could at least get into this zone here before it would give me a reversal. That's what I was looking at. So I was thinking, okay, so price will need to take at least, you know, some kind of liquidity before it was to do it, before it would give a proper reversal. So I'm looking at this as, you know, price has to induce a high first before it goes lower, or induce a low first before it goes higher. So I was waiting for there to be a reversal, and I knew that there had to be a key level for it to reverse that. So I was looking at this trend line liquidity to be liquidity where price would take, and then it will come back lower again. So I thought if price had kept this liquidity intact and then come back down to this zone, I could enter. Where could I enter? So we had the fair value gap here, and we had a fair value gap here. Right, two fair value gaps. The way I would look at that, this is the fair value gap here. Sorry, first of all, this low as liquidity to take, as well as these lows. But through my back testing, this low would be the low that I would go for. And then I see the inefficiency in regards to the way this low didn't touch this high. So there's a gap there, right? So if I was to go off of just a 5 minute alone, I didn't actually use the 1 minute at all for this trade. And I saw this, so I just picked the 50% of the fair value gap, right? And I used that as my entry, plus spread. It's about 4 pips. I think I've done about 4.5 for the sake of spread, right? So I used the 50% and I entered off of that, and I set my limit, and I was actually targeting for the first partials this high, about a 6R roughly, right? So I set my limit during London session, and let's see what happens. Great. So as you can see, this is the kind of reaction you want when you take a trade, right? Because the price didn't stick around at all. So you see here, you got these lows. Price came in, took out these lows, took out my final low here, tapped in to the actual an order block there. See, for me, I don't use order blocks that much to trade off of. I use mainly fair value gaps and imbalances. That's just me. That's just what I prefer to do. But it's a valid order block here, bullish order block to play off of. Would have given me even better entry, but it is what it is. So price tapped in, didn't wait around, and we've got given me a beautiful reaction. I was able to go break even very quickly, and then, you know, that was that, which is great. So let's look at managing this trade now. So what actually happened was, which was a bit of a bummer, right? Price came to this high, the very high. Literally, my alert was set at the high. So I've come back to this trade now. I'm like, okay, so this is the first partial profit taken area. And I wanted to take at least 50% there and ideally take the rest of my trade up here for 1 to 12, right? Because I thought that we can get one more sweep before we maybe had a hefty reversal, because we were deep in premium. However, when price came up here, this was about 6R. It didn't take this high of the previous day Asia high. It actually began to reverse from there. So you can see price stalling at the zone. Sometimes price does this and then it goes and it gives a massive burst up, and it will smash your take profit, and it's great. But I saw this and I was like, we may come back lower, and I'm not trying to give away all of this profit. So what I actually did was I took 50% partials at about 5-ish R when I saw the kind of reaction we were getting, right? So that's what I did. And this is how it played out. Came back down and then took out literally the rest of my trade. Boom. So 50% of my trade partials were taken, the rest of it taken out. So that was that. That was that trade done. And that day, I didn't really trade anymore during New York. I left it at that, right? So we're gonna go on to the next day now. So we're gonna play it on the 15-minute time frame. This is where it gets interesting. This was an interesting day for me because it was a frustrating day, but a day where I learned some major lessons, and I'm going to explain why. So let's go back to the 5-minute for a second. This is what it's happened during New York. Just quickly speed up. There we go. Cool, right? Yes, perfect. So go back a little bit. I want to break this price action down for you guys. So if we go into the 15-minute, I'm going to show you what I was seeing. So I saw, again, this is the trade that I took yesterday. Move it over. You can see when maximum of 6R, took partials at 5R, 50%, and came back down, took everything else at break even. Cool. So price came down again, and it went one more sweep of liquidity. Okay, and the reason why this was important because you can see the aggression at which price came down, and then how quick price reversed, and then took out this high, giving us a solid market structure shift on the 50-minute, that is, right? And that gives you, real confidence to know that, price could be looking to give us a short-term reversal, right? But that wasn't the only confidence. The other confidence was the fact that if you look on the 15-minute, yes, we've had another low being taken, right? Which is key. Liquidity is everything. Another low being taken, and this imbalance down here being filled on the 15-minute. All of this. I'll mark out this for a second. Right, so the 15-minute imbalance being filled. So you're seeing this now. So I'm seeing this now. I'm looking at this price action here, almost like a channel, almost. I'm seeing this price action here, and I'm like, this doesn't look like reversal price action. It looks like this is just creeping back to suck more people into the sells, create more liquidity for them to give us an aggressive buy to at least take out this high up here. That's the way I see the market. Through back testing, through market experience, that's what it looked like. So I was like, okay, I want to buy again, right? So this buy didn't quite work out. It didn't do what I wanted it to do, which was take this high. So I was thinking maybe, today, the 21st of June at the time, maybe that could be the case. So back to the 5-minute. Market tapped into the 15-minute balance, filled it, gave us so this is the time that I'm not usually trading. This is London close. You've got here market structure shift, and you've got fair value gap there, and you've got an entry here. Again, it's not during my trading hours. I don't trade during these hours, but this is an amazing entry and amazing trade, right? But London Open came on, right? I wasn't trading London Open that day, but there was a good entry in there, which I'm not going to break down there now, but I will show you briefly. It's come out of Asia. London Opens happened. Aggressive push down. An internal low has been taken. Perfect, right? It's giving us this market structure shift. If I go back on the 1 minute, you got this market structure shift. You've got an imbalance here now on the 1 minute. This is, and you've got perfect entry on this imbalance to get a great trade. So again, for me, I would take 50% roughly of the imbalance. Stop loss below the low. Target, obviously, at least Asia high, but I would be, targeting this internal high here, and yeah, 50% of this zone at least. So easy 1 to 5, right? If you want to just take a quick scalp. Anyway, so that's that trade opportunity. I didn't take that trade. I wasn't on charts at that point, but I was on the charts during New York, and this is when things got a bit interesting and frustrating for me, but a lesson learned. So if I go back on the 1 minute, I want to show you what I was seeing. So I was seeing trendline liquidity here, right? And this aggressive push down, taking out this trendline liquidity, giving us a new high here. Cool. Then I was seeing these lows here being swept. 1, 2. And then a new market structure shift here has been made. And then within this, I was seeing these lows. I was seeing these lows. This is a 1 minute structure, 1 minute time frame price action, right? And I was seeing, you know, a market structure shift. Whoops, just here. And then I was seeing, you know, this as potential. See, it's tapped in here. So lows have been taken. Market structure shift has been given. Created lows, created liquidity. These lows got purged, tapped into this order block on 1 minute, created a new high. I'm like, cool. Maybe surely we're going higher now. Here's the thing, right? At the same time in seeing this, I blatantly saw, because I said it to myself, I blatantly saw this trendline liquidity on the 5 minute being formed, right? So I know that I saw this. I was like, okay, blatant trendline liquidity. It's obvious. It's not even like slight. It's obvious. So taking any trade now would be risky, right? And I still took the trade based on the 1 minute time frame, and it wasn't wise. So I actually took my entry down here, stop loss below, you know, the low that took the liquidity. And I was thinking, okay, so now maybe we might get the major push up to go and take all of these highs. We can get a big trade, maybe a, you know, 1 to 20 or something like that, right? However, price obviously was what it needs to induce lower before it goes higher. So I know this is the key nugget. This is the key nugget. Price swept me out. Cool, lost that trade. Obviously, price wanted to take out the trendline liquidity first before it went, right? So easily you can see here, trendline liquidity was purged. And then you had another internal sweep in here with these lows being taken. And then we had the market structure shift here. And then we had the entry with this fair value gap and order block down here. Would have easily been entry on the 50% personally of the fair value gap. Stop loss below this low. What's that? A 5 pip-ish stop loss. And then target the moon, right? Well, definitely for me, I would have targeted at least there for partials, and then this high, taking most of the trade off, right? So let's say 12R roughly. Let's see how it panned out. So you see, price just flew, and then went into the next day, and then it went even higher again, a bit more. But to be honest, by that point, I would have been pretty much out of the trade almost completely. So it maxed out at about 20R. I missed that trade simply because after this loss here, I was like, you know what? Maybe price is going lower. But thing is, I'm experienced enough now to know that, you know, I usually base my trades based off 5 minute time frame. On this occasion, for some reason, I got maybe a bit confident, took it off to 1 minute, and I didn't take the trade that I should have taken, and I missed out on a major trade. So where's the nugget? The nugget here is wait for price to take out obvious liquidity before you ever take a trade. Because that was the case here. I took the overconfident trade. If anything, I should have either half my risk there or, you know, waited for price to take out the liquidity. If I really didn't want to miss out on the trade, I should have taken that trade, taken the L, and then stayed on the chart to look for this buy because I knew it would be coming based on the trend line liquidity that was being created, but I didn't. So please learn from my mistake here, guys. Yeah, if there's blatant liquidity, wait for the liquidity to be taken and then take the trade. I know better than that, and I want you guys to make use of my mistake and learn from my mistake. Backtest it. It's worthwhile, trust me. So hit like, hit subscribe, and I'll speak to you all soon. God bless. Take care.